Hey, Job here. On this channel, I invest 100% of my income and live out of my Robinhood brokerage account. Today, we'll be going over the week 54 portfolio update since I started this strategy that should hopefully bring me to an early retirement at 40 years old. I'll go into all the details of my performance this week. I'll be breaking down the ugly side of margin and how I underperformed the S&P 500's performance by over 2x with my minus 6.74% loss this week. I'll also check in with my margin health, all my dividends received, portfolio thoughts, and finish with the finance videos of the week as usual. All that said, you'll get radical transparency on my channel. Like, for example, this is a down week this week, but whether the market is up or down, you'll see all my real numbers, see exactly how much skin I have in the game for any given position. If you appreciate all that transparency, make sure to give a like and subscribe. As usual, just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risk, and make sure you have a good read of this whole disclaimer. As far as a weekly flow that I use for the portfolio, I won't deep dive into it. If you want to check a full breakdown of this, check out the video at the top right where I break down the chart in full detail. And with that said, let's just get started. So if we pop over to Robinhood and check the portfolio, so yeah, we can see that Friday was a big red day. I'm sure everyone felt it, and particularly whoever's invested with margin, we felt it like, yeah, even more so given the margin amplification. So yeah, you can see my portfolio wasn't spared from it. It was a completely red day. I was almost starting to forget what that felt like given the run up that we've had over the last several weeks. But yeah, I was down big on Friday. I was down 7.68% or 18K in a day. So a lot. I wish I could kind of show you the unamplified version, but it's like roughly less than half of that if you check without the margin amplification, right? But if we pop over the week, we see that I'm down 15.7K or 6.74%. Yeah, just really that massive drop on Friday, right? So yeah, so total, that's giving me a net value of 217.4K. On the month, I'm still positive, just positive at 3.1K or up 1.49%. On the 3 months, positive still, up 28.23% or 47.8K. Year to date, still positive. In the grand scheme of things, that dip still not too crazy. We'll see if it keeps going. We could totally see this fully erase. I wouldn't be surprised too, honestly. But yeah, I'm still up 34.3K or 18.74%. We check on all since I transferred in since July last year in Robinhood, up 23.53% or 41.4K. So yeah, you can kind of see in the grand scheme of things where this dip lands. Definitely a severe dip here when you look at it, but we'll see if it keeps going or if we have some bounce off this next week. Part of me, I hate to say it, but part of me is hoping there's a little bit more of a dip next week and then I can buy it since I missed the one on Friday, but hey, we'll see what happens. And if we dive into my portfolio spreadsheet to kind of just really do a deep dive into all these numbers here. So if we check here, so if we add up all the assets in my portfolio, my gross value has actually dipped under 400K, unfortunately. So I'm sitting at 399.2K. My margin used is sitting at 182.6K after the bills I paid this week. And yeah, like I said, the net value is sitting around 216.6K. So yeah, just big drop off this week, right? You can kind of see here actually. So on the day, if you factor in margin, I was down 8.37%, right? But if you take out the margin, I was down 4.85%. So you can kind of really see the margin amplification, right? From where had I not have any margin, my portfolio would just be down 4.85%. But given the margin, I was actually down a lot more than that, right? So roughly 1.8 times, 84 times. So roughly your leverage multiple, right? And then if we check on the total return and unrealized gain side of things, so if we look at the total profit, so that includes realized gains, dividends received, and all that based on the net value after margin. I'm still positive 84.4K or 38.99%, which is great. On the unrealized side, still in the green as well, up 12.6 thousand or 5.83%. So yeah, you can kind of see how things have changed a little bit on the total return side, right? Things that have still been in the red or are just got deeper. IALT is a new position, which we'll dive into later in the video. DRAM, I was like way positive on this the other week just because of its big bounce ups, but this went down a lot on Friday, 15% here. So yeah, might potentially be buying the dip on this next week. BCAT is just slightly in the red here on the unrealized side and total return. YMAX finally dipped back into the red even in total returns. It was in the green for a little bit for a couple weeks there. These are firmly back in the red now. And then KGLD and KCOP as well took a hit with the dip this week. And blocks and Bitcoin just down big right this week. So even on total returns, yeah, just because from what I could see in the news, there was apparently like 1.8 billion in leveraged assets that got liquidated in Bitcoin, and that's kind of part of what shot the price of Bitcoin down, right? Like where's Bitcoin sitting at today? Yeah, just at 60.6K, right? So it's come down a lot. Like I think I was buying in the range when it was like in 75K, right? So it's come down quite a bit. So yeah, big red week in the portfolio. And like I say always, right, I'll be showing it whether it's red or green, right? This week it's a particularly red one. So you can count on me to show that no matter what, right? And then if we check in on how this stuff is splitting up between the growth and high yield income. So on the growth side of things, I'm sitting at 195.2K. That makes up the 399.2K. So roughly 48.9%. And then on the high yield income side, I'm sitting at 204K. So yeah, that's kind of how that splits up between a full gross balance there. If we check in on the margin health, we can see that despite the drop, still holding on healthily, still above 50% equity. I'm sitting at 54.26%. If we look at the gross value, margin used, net portfolio, we've gone over these already. But if we take the gross portfolio value and apply the 25% blended margin maintenance ratio, so all my positions are only 25% margin maintenance ratios. That gives me the best margin buffer that I can kind of ask for given the Reg T margin, right? So that gives us the number of 99.8K. So my portfolio would have to drop to this level to basically be margin called, right? So if you take that and minus that out to the net portfolio value, you see a margin buffer of 116.8K. So if you take that, divide that by that gives you the margin buffer of 53.92%. So this roughly matches what you'd see in Robinhood, right? So this is here, right? But personally, like I say in every video, and I can't stress this enough, honestly, is that like, I think it's more important to actually take in mind your gross margin buffer, right? Because at the end of the day, your portfolio has to go down by this number, whether that goes down from your net portfolio value or your gross portfolio value. It's still that number that basically would have to happen, right? So if you take this number and divide that by your gross portfolio value, that means that like if your gross portfolio value drops by 29.26%, then you'd be in the margin call, right? Because this drop is basically the equivalent of a 53.92% drop on your net portfolio value, right? So I think that one's really important to keep in mind. So obviously like this, I want to keep growing, right? Like ideally I want to get this to a 40-50% range just so I can like if there is like a crazy 50% drop, I'd be able to withstand it. Like if tomorrow there was a 50% drop, then I'd be in trouble, right? But the likeliness of that happening I think is slim. Like the 30% drops we've seen from like COVID in a month, from the tech downturn in 2022 over a year. So I think I'd have time to react there, right? And bring in cash from the outside of the portfolio and things like that. So gradually want to kind of grow this, but yeah, always keeping an eye on it, obviously. So yeah, that's why this is highlighted bold green, right? As far as my buying power, I'm sitting at, actually, I need to update some stuff. I'm just realizing. So I think I forgot to bring stuff in after my dividends came in. So bear with me here. Just gonna update this. Great. So now we're good. Okay, so margin use actually went down. So my dividends, this is a good example actually. So my dividends came in on Thursday and Friday here. So you can kind of see that my chippy dividend came in, KGLD, ULTY, YMAX. So I let all those deposit to cash, right? Half of the weekly dividends got invested, as I mentioned, but so the rest pays it down. So that brings down my margin used to 181.7K and my margin total 268.5K. So which gives me a buying power of 86.7K. So that's by taking your margin total, minusing out your margin used. And if you take half this number, that's basically your cash available for withdrawal. So 43.3K. So really, yeah, if I really wanted to be fully invested, like I could either take 86.7K, reinvest that in the portfolio, and that would kind of just grow my gross asset balance, right? Or I could also and that would bring all this to zero, then I'd be basically like fully margined. Or I could take that cash out, like I could take 43.3K out tomorrow and kind of see how that goes. But yeah, like I've said, I just want to keep growing this and kind of keep growing this as a buffer, right? I don't want to fully go into margin in that sense, use up my full availability. And as far as my monthly dividends, I'm sitting at $5,101 that I'm roughly making per month. That amounts to 61.2K a year. So that's like, in a way, you see that this kind of adding to my salary, and we'll kind of go over that in a little bit here. But weekly, that's 1.17K, or daily, I'm making $167, and As far as distribution yields, if we divide this up by just the high yield income assets that I have within the full portfolio, that's actually a 30% distribution yield, or 15.97% if you go off the full portfolio, right? And yeah, one fun thing that I did this week and that I was talking about last week is that I kind of wanted to get an idea of what my kind of full salary is if I kind of factor in dividends, right? And I've kind of laid out the 3 different scenarios, right? So my base salary right now is 175K, and with dividends, that actually pushes up my total salary to 236.2K, which is awesome. If we factor in my annual bonus, which is 7%, my salary is closer to 187.2K a year. If we add in dividends to that, that actually pushes it to 248.4K. And then if we put in even just my retirement, so really total comp there, everything included. So this includes my 3% match for an extra company retirement account, which I won't start getting for a year from now. But yeah, once I get that, that's like 3% extra. And then there's also 50% that they'll match of 4% that I contribute to the 401k. And then also $800 that they give me for an HSA every year. So all that included, my total comp's closer to 196.8K. But if we add in the dividends as well, that's actually 258K. So pretty awesome to see like what my total salary would be, right? With all that factored in. And the thing is here is that like in a way, say worst case scenario, all my dividends started being ordinary income. I had to pay taxes on it. Like in a way, I kind of see my dividends as an extra salary, right? Like had I gone out and got a second job and started making 61K extra a year, I'd be taxed at that same exact rate, right? So in a way, doing these high yield dividends is a lot more passive. Like I'm not doing too much more to kind of get these. I'm not working an extra 40 hours a week or whatever, 20 hours. And plus a portion of them actually get the tax benefits of ROC or lower tax rates. So it's like, yeah, only really a portion of them gets taxed at ordinary income or at a substitute payment if they get stripped out with the hypothecation, right? So in a way, pretty awesome to see that like my total comp really with all the dividends included is 258K. Pretty awesome to see. It'll be cool to kind of track this week to week, month to month and see like what milestone we hit with these, right? Like once I hit like 300K, for example, for this, it'd be a pretty cool milestone with the dividends included, right? And then of course, like, as I've mentioned in other weeks too, like these dividends aren't free, right? Like, because I am paying a 4.5% interest margin rate on these. So I'm paying that on the 181.7K margin balance, right? So that amounts to roughly $677 that I'm paying a month to hold that margin, right? Or 8.1K a year or $22 a day. But the thing is that I have a positive spread on that, right? So I'm paying $677 to kind of carry that margin, but with that, I'm making 5.1K a month. So it's a great spread, right? Like if we really calculate that out, like that's minus $677.91. So that's $4,423.10 that I'm making on top of a leverage that I'm carrying off, right? So really nice positive spread there. And personally, I think for how I'm running stuff, that's a great deal that I'd take any day, honestly. So yeah, love the spread, and this will just kind of keep growing as I keep investing into it, right? And yeah, that's the numbers there on the sheet. If we pop over to Snowball to kind of check into like a deep dive of the categories, we can see that still all the categories are holding in the green. So the ultra yielders here, right now, this is like a 23% allocation. Eventually, as I kind of build up the rest of the stuff, I want this to kind of fall down to 17%. My anchors, I want to build this up to closer to 30%. My hedges are sitting right nicely at the 10% mark where I want them. And yeah, my growth and dividend growth anchors that I eventually want at 43% or so. And that should hopefully hit that by growth and the little contributions that I'm making towards it. But really, if we dive in, we can kind of see that like, yeah, the ultra yielders are still holding green, mostly through dividends received. It's definitely negative in capital gains because of like the high yields that they pay out, right? So YMAX and ULTY are the big culprits there. Obviously, BTCI is a big one. GIAX and Chippy is like holding down the fort really between all of these when we look at them. And Blocks is new, but also just got hit by that crypto downturn that happened this week, right? Not as much, it didn't go down as much as BTCI, which was cool to see, right? And just because it's a lot more diversified and does have some like normal stocks like Nvidia, Robinhood or whatnot that are crypto related, but not necessarily like crypto companies. The anchors are all holding on strong. Yeah, BCAT's down a little bit, but still a relatively fresh position. KCOP is holding on good as well, but just slightly in the red here. MLPI, everything else just kind of holding up in the green there. XPAY definitely holding down the fort there, up 30.83%. That includes capital gains and dividends received. XPAY is one I've been really happy with. And yeah, anytime there's like dips, I just try to buy. And I was really lucky with the dip here when I bought it in March while I was unemployed here. And it's had benefited from that full run up. So really lucked out with that buy there. But yeah, if you can buy the dips on XPAY, you can actually, be up on capital gains and on your dividends, which is great. On the hedges, yeah, so ORR kind of keeps going down in the red, and as it kind of keeps getting hit, it's just been a lot more affected by the conflict in Iran, given Japan's exposure to the Strait of Hormuz. Gold just got hit a lot this week as well too. And then IALT, which again, I'll get into after this, brand new position. And yeah, so that's down a little bit, but not too bad compared to the rest of the market. And then CLSE up big still. It's just benefited a lot from the run up that it's had over the last several weeks, right? Yeah, I kind of bought here, and then it's benefited from the crazy run up that we've had, right? And yeah, and then from the anchors, these are all holding up great, all double digit in the green, except for DRAM got hit hard. So a very small position, right? Within this side of the portfolio, it's 0.53%, and really the allocation here is 0.21% of the portfolio. So for the one guy in the comments that says I'm betting my whole retirement on the memory thing, that's this is how much I have in my portfolio as my allocation. That's hardly my full portfolio, right? I'm not crazy. So yeah, and then if we check in on the growth side of things to kind of see how we did against the market. So if we check here, so again, these numbers differ a little bit from what we see in Robinhood, but you just kind of get the general idea. So yeah, it was down 14.6K on my portfolio, or 6.31%. The S&P in the same time was down 2.5% or 5.8K. So you really see that I was outperforming for a bit, but then this big dip on Friday just hit me hard. And really that's kind of the double-edged sword of margin amplification, right? You can kind of really see it at play here. In the beginning of the year, I was outperforming, and then I was underperforming pretty heavily. And then, yeah, just with this run up, the margin application has been helping a lot. But you can kind of see how, you go up as much as your margin you have, and also you go down a lot. So you can kind of see how those down days hit me harder, right? And that's the important thing to keep in mind with margin, right? It's not all just gravy train when it's going up, right? You get hit hard on those down days just as much. So important to keep in mind. But on the month, you can kind of see that I'm still outperforming here. On the 3 months as well. On the 6 months, year to date, still outperforming as well, up 19.4% or 35.3K. This is total returns, right? Capital gains, realized P&L, dividends received. And yeah, if we check on the heat map this week, so yeah, we see that really the market got hit hard across the board, right? The only thing that held up green for me was MLPI. So that's just kind of with the conflict with Iran spiking up again, and Iran kind of doing attacks, and kind of the peace plan falling apart. So oil prices shot up, and that benefits MLPI. Yeah, so it just kind of shows you that the rest of my portfolio is just very exposed to everything. Yeah, kind of makes me show that maybe I should kind of go along the same vein as MLPI potentially. I've been looking at potential XLUI, having some utilities exposure potentially as an income play, and plus just something that's a little bit different than the rest of my very tech concentrated portfolio, right? But SCHD didn't get hit as hard this week, which is cool to see, and even CLSE, so it's long shorts playing up nicely. Chippy was down a lot this week. Yeah, even more so than, a little bit less than VGT, but more so than QQQI. About the same as QQQM, it looks like. A little bit more than SPMO though. ORR down a bit as well. Kind of just seeing all the little correlations we have here. LTU was down a lot more than the S&P. Same for YMAX. I think YMAX just had a lot of crypto exposure this week, and with its current rebalancing. So that got hit hard. And yeah, BTCI you saw here, that just got hit hard. Down 17% this week. You can see that blocks didn't get hit as hard by the crypto downturn here. But yeah, just spread across the board, right? Yeah, even GIX got hit hard here. It just has a lot more international exposure. DRAM got hit hard. T not so bad when you compare it to the rest. So yeah, just always good to see what things are affected on a macro range, right? And can kind of help inform potentially what to invest in next week, right? But yeah, still year to date, if we look at that, even with that little dip, still holding on solidly in the green, right? When you look at across the board, SCHD up big, Chippy up big still, PMO up great, QQQM as well, XPAY still matching VU, which is cool to see. TDAQ really holding its own against QQQM. So yeah, just cool to see. And then next week, probably I'll be looking at the dips here to kind of really see what I'll invest in next week. That'll kind of help inform things, right? And then if we check in on the dividend calendar, kind of see this week that it was a little bit of a lighter week. So I had blocks and GIX on Monday. So $14 in blocks or 41%, $14 from GIAX or 26%. Had my TSPY monthly dividend drop, $74 or 14%. Chippy with $459 or 48%, KGLD at $50 for a 16% yield. ULTY at $206 for a 69% yield, and YMAX at $145 for a 60% yield. So yeah, altogether, that's roughly, just under $1,000 that I made this week. And this month is going to be a big month too for dividends. It's looking like they're projecting like 5.9K in dividends. So we'll see where we end up by the end of the month as stuff fluctuates. But yeah, it's going to be a big month in dividends. And yeah, you can see that Snowball's projections come up a lot larger because they take the last payment and project out, right? And I don't like doing that as much because it kind of, either it's super high or super low, and I kind of take the average. Like I said, for my calculation here, I do the average of the last 3 months for the monthlies and the average of the last 4 weeks for the weeklies to kind of get a more accurate picture there of the dividends. So if we dive into the dividends proper here, we can kind of see, what I've been paid for the last trailing 12 months, right? So since I did my big rebalance in February, I've been kind of just gradually getting more and more every month. So I like this positive trajectory, and I think that's kind of like reflective of like, one, the market has been doing good, but also like I am focusing more on the anchors, right? As far as the dividends and reinvesting in my investments, right? So I think this should smooth out a lot and grow a lot more consistently than it has been over the last trailing 12 months, right? It's been kind of really, really up or down. So, and been kind of just consistently beating where I was at in the previous year, which is cool to see. As far as the yield on cost, it's kind of saying that I have a roughly 18.6% yield on cost in the portfolio. The usual suspects as far as those that have eroded are ULTY, YMAX, BTCI. Blocks now a little bit with its dip. Chippy its dividend keeps growing technically because it keeps paying out like a 8% yield every week, but even on as the price grows, so technically the dividend's growing. So my yield on cost on it's actually 61%, which is crazy to see. But really, like, you can kind of see the core anchors over here of the portfolio, right? And that's why I'm kind of really focusing in on this middle part here, just because like these, even as it dips a little bit, like the yield and the NAV holds on strong. So really refocusing on these ones, right? So like if my portfolio was just in ULTY and YMAX, then I'd be a lot more worried about the erosion rate. But I'm happy to kind of just keep collecting the income from ULTY and YMAX and just reinvesting like half of it into the other holdings here that are a lot safer. So like I said, like this year I'm really just focusing on this middle part here, right? Like I'm really barely investing in ULTY or YMAX anymore. A little bit more in like blocks and BTCI and things like that, and Chippy if there's more dips, but really just in the middle portion here. But that's the numbers. As far as updates related to the portfolio, so like I've mentioned in the last video and today, there's you'll notice that there's a new position here in the portfolio, IALT. And shout out to someone in the Discord that actually brought it up. And it was interesting to just look at. And then I think like the numbers for it kind of spoke for itself. So like when I look at it, this is from someone from like iShares, and I think they're also partnered with BlackRock here. But this is a fairly new fund. It came out in December last year. It's already at like 4.2 billion in assets under management, which is crazy. But they just kind of use a multi-asset strategy across alternatives. So equities, credit, macro strategies to get returns across any market environment. So just a nice way to kind of diversify. It has a lot of positions when you look at this, right? They have quite a bit. Futures, cash, derivatives here. Like, they've got a lot. And just like, what's nice is that it does have like international exposure across the world, right? You kind of see like a lot of different companies here across the world, really. Canada, Japan, I see stuff in Europe, right? Bank of Nova Scotia here. Shout out to Canada, where I'm from originally, FYI. And Nintendo in Japan, right? There's a bunch of stuff here. So I think what's nice is that it just gives a different exposure to my portfolio. I'm very like concentrated in the US and very over-indexed in tech. So this one kind of gives like a nice breakdown across a lot of different areas, right? So you can kind of see how that's working. But what's really been impressive for this is if I go to the backtest here with Testful.io. So I threw in IALT, ORR, CLSE. And you can kind of really see IALT, right? Like just steadily growing. So what's interesting here, the interesting part is that like, OR and CLSE dropped here from the Iran conflict. And then you look at IALT and it's like the conflict never even happened. It just kind of continued its march forward. So very interesting. I think like this is the thing that really convinced me, just kind of seeing that it's as if the Iran conflict didn't even happen for it. It just kind of kept its march forward. So super interesting what their strategy. And so what I ended up doing for that really was I sold a portion of ORR to kind of fund that, right? So I had a couple tax lots from ORR that were in the positive. So I basically just bought that. So you can kind of see here. So this is like my little trade alerts channel that you have in the Discord. So a little benefit if you join a Discord for $3 a month, I'll just get a heads up of like all my buys and swaps or anything like that. So here, yeah, I just had like I had like 3 tax lots from OR that I just sold for a very tiny gain, $4 or a 0.27% gain. And I started my ILT positions with it. So yeah, I think it was a nice swap just because, yeah, just given that like OR does have a lot more international exposure, but it's a little bit overly concentrated in Japan, right? So I like that IALT provided a little bit more broader exposure across the world. So yeah, I'm going to keep an eye on that and we'll keep building this up potentially as part of my growth investments every week. Or if I see potentially more chances to cut OR as it runs up, hopefully in the next few months, I might kind of bounce those out a little bit better there between the two. Just because like OR, yeah, I like the idea of its long shorts. And then yeah, IALT also has some long shorts in there too as well, right? But yeah, no, it's just kind of been a little bit disappointing with how it's handled a conflict, right? I think like, yeah, just its exposure in Japan has kind of just hurt it really, like, cause they're a lot more exposed to the Strait of Hormuz. So I think it's had trouble kind of having that same rally that the rest of the world and the US in particular has had with the conflict, right? Kind of being on pause for the last several weeks. So yeah, you can kind of see that OR has just kind of struggled and just kind of stayed at this level, right? So yeah, that's IALT. Looking forward to kind of keep investing into it. And yeah, and then after, yeah, I was going to cover this in this section originally, but yeah, I talked about the salary stuff. So yeah, just this new little section in investment sheet here. I might have to maybe add this into the portfolio sheet template for people if you're interested in this. Let me know in the comments if you are. That'll be a quick way to add it. But yeah, that's the thing. As far as the finance video of the week, it is this video here. So yeah, the 5 harsh truths about retiring at 50 from Retire with Zero. So the last little while, in particular, last couple of weeks, I've been watching a lot of videos about like just trying to find people that retired early, like in their 40s or 50s, and kind of seeing what they've run into. And like, honestly, it's something I've been kind of doing ever since I kind of decided to go on this journey to early retirement, right? I've been actually doing this for the last few years and researching that, right? And yeah, this was a fun one I came across just because like, yeah, someone that retired at 50 and kind of goes over like a lot of the main things he's learned, right? And one thing that stuck with me for him was that like, yeah, he just said he's had to get used to kind of making friends with older people since a lot of people his age are still working at 50, right? And you just kind of naturally lose touch with some of those and kind of start being lonely and stuff like that. So definitely something to keep in mind if ever I do manage to hit my crazy early retirement goal at 40, right? But honestly, it is making me think that like I do need to do a video about my early retirement thoughts soon. So yeah, I mean, over the years, I've definitely been jotting down a list of what I would do in early retirement potentially if I retire from my kind of main career job, right? Yeah, like to put it short, like I wouldn't be quite done working in a way, like, you know, like there's a lot that I'd kind of want to try and do and just try out for fun if it didn't really matter how much I was getting paid, right? Like if my portfolio was paying me in the background the actual salary that I was making before, like, yeah, I don't mind taking like a $20 an hour job and just kind of doing it for fun, right? So yeah, there's a bunch that I want to go through there just because like, yeah, I think that's one takeaway I've seen from like a lot of videos I've seen over the years is that like people that retire and have like no plan of what they want to do. And then, yeah, I don't want that to be me. I definitely have a lot of different plans that I'd want to try if I do retire early. So yeah, I'll definitely do a video of that eventually, sometime soon, hopefully. Yeah, that'd be a fun one to kind of see what the whole end goal of this strategy is, right? Like, where do I want to go with this? I'm not just going to sit on my thumbs and kind of not do anything, right? But yeah, that's the video. If you want to support the channel, you can always just check the description below for any video. You'll always get my free Snowball portfolio link that's there. So you get to see all these same numbers and poke around yourself. And yeah, nothing's hidden there, right? You have my free Blossom Social profile where you can kind of get some similar numbers. And then on the paid side of things, like there's my portfolio spreadsheet tracker, which you can kind of get this same spreadsheet and use it for your own tracking and modify as you want. As I mentioned in my Discord this week, and as I've been hinting at the last week or so, I've actually kind of closed down the invites to my Discord, unfortunately. So it's not private. So if you want access to the Discord and kind of access to like our 450 member strong community here and get access to my trade alerts, just like a lot of like-minded investors that are living out of their brokerage. And yeah, in a lot of different ways, like some people are doing with growth, some people are doing it like a hybrid approach like I'm doing, some are doing options. So yeah, lots of people to pick their brains of and answer your questions, right? Like it's not just relying on me, which I love. Everyone kind of like shares knowledge and helps each other out, which is great. So yeah, nice little community you can join. I can either do that through joining my paid Patreon or the YouTube membership, right? And that's only $3 a month to get full access to that. So check it out. And yeah, if you want to keep supporting the channel, make sure to, and you appreciate the transparency, give a like and subscribe, hit the bell notification to be notified about future videos, and I'll catch you in the next one. Peace.